This conference will now be recorded.
Hey, what up, Flex fam? What up, Trade with Traders? How's it going today?
What's going on? What's going on? You guys ready to kick off the week strong? Let's get going, man.
How you doing, Matt?
I'm great. I'm ready to rock and roll. I'm ready to get the week started. It's going to be an exciting week. We got a lot going on. We got vaccine stuff. We're closing on Christmas. They're talking about stimulus. There's going to be a lot going on in the market this week. So hopefully we're positioned pretty well. I don't know. We got a pretty good comprehensive breakdown of everything we're looking for. I'm ready to rock. I'm ready to go, man.
And welcome all the new people who are trying out our service and for the first time. This is something that we offer every Sunday. We do our comprehensive breakdown, and the webinars are so important. But just to quickly get things started, I have this up here written level up, and I wanted to ask Matt Reese. I know that you've been trading and you've just been able to level up in your own personal life. I've seen it firsthand. So can you just talk to everybody part of this service a little bit more intimately about how you've leveled up and give them a little bit of perspective of what you're doing that's taking your trading to the next level?
Yeah, so I mean, it's important in every professional endeavor or any job, whatever. But for me, trading's all I know. And with trading, it's all about adapting and not getting left behind. And the market this year has been the perfect embodiment of that philosophy, adapting and changing and getting out of your comfort zone and all that stuff. So I don't know, man, leveling up, it's like I've always known in my head like what my potential is as a trader. I know that the sky is the limit. I've always known that. I've always understood that, but it took several years making X amount of dollars and then, very slowly breaking barriers and getting bigger numbers and getting comfortable with bigger numbers and holding larger position sizes and stuff like that. I just think level up when it comes to trading, it comes down to that. It's like, it's understanding that with more experience, with more trial and more error, you have this like backlog in your head. And that experience is, you can't replicate that from reading a book. You can't replicate that watching a YouTube video or some DVD or whatever. It comes over time. And your own journey, you know where you are in your trading journey. And taking that to the next level as you progress through your journey, it's crucial to the game because you can't set limits on what you're able to do. So for me, leveling up is just about taking my game to the next level. I know trading's all mental, it's all psychological. And again, I talked about that backlogs of trades that I have. I also have a backlog memory of all the psychology that goes into it. So how to handle winning, how to handle losing, how to move on, how to consistently be consistent, because that's a big part of the game too. I just think leveling up has everything to do with that. It goes hand in hand with trading. You got to level up. You got to adapt. You got to evolve. You can't be stagnant. You can't be fixed. You have to be dynamic. You have to be fluid. You got to level up, and
So
knowing the time's right.
the mindset for this week, guys, is leveling up. Wherever you are in your journey, if it's $200, $300, it doesn't matter. What I understand from what you just said, Matt, it was about micro changes along the way. It's about this experience that comes over time. So just remember, each week you have a chance to level up. You have a chance to learn something new. You have a chance to become better. And so this week, what I really want to emphasize to everybody in here, everyone who's joined us in our journey, is that we can level up every single day. We can get a little bit better every single day. You don't become great overnight. You become great by just doing little things every day that make you a little bit better. So that's how I want to start this, that everything we're going to do, including the way we do our webinars, including the way that we handle trade with traders, it's only going to continue to level up. Each week, we're going to do things and make sure that we continue to elevate our game and that we elevate, and I wanted to make sure that you guys understand that.
Something that's interesting about trading and leveling up. So leveling up in like a typical cliche, the standard 9 to 5, it's not based on your schedule or necessarily based on your performance. A lot of the time it's random or it's more systematic in a way, if that makes sense. So like, let's say you're working for like Google or something. You climb a corporate ladder, and it's in your control in the sense that, yeah, if you show up to work and you do all the right things and you're in your positive mindset, and you know everything you're doing is well, like, yeah, you know, it's only a matter
You'll
of
get
time.
a promotion. You'll get another, every 2 years, you'll get a promotion.
It's only a matter of time before you level up. But what's so fascinating about trading is that, think of it this way, like you can promote yourself whenever you want. Like that's why trading is so awesome. And I know, like for me, like, yeah, I've been trading now over 7 years. It took me the better part of 3 years before I built a system that started really working, where things started clicking. Really, another way to look at it is it really took me about 3 years to level up, my first promotion. And then it took me another year, and then it took me a few more months. And you know, every 6 months or so, I kind of reached this part of the ceiling where I'm like, what the hell? Like, boom, let's go through that and let's level up. Let's you know, take what we've learned over the last several months, make a little adjustment, like Josh said, micro adjustments along the way, and fine tune my strategy. And that's the beauty of trading. It's like you have this backlog in your memory, or maybe you write it down or whatever, and it's trade setups, you know, chart data, and it's psychology. And you use that and you can level up along the way. And that's a really beautiful thing about trading, is it's on your own time, and how much effort you put into it, how much time you're putting into it, and taking losers and taking losing situations, and using it to your advantage and learning from it. And yeah, it's a beautiful process. You got to look at it like it's totally in your control, because it is. It's totally in your control.
Perfect, man. Appreciate that. That's great insight. It really helps me out a lot. And
Yeah.
let's get into it now. Let's get right
Let's
into
break down
this.
some
I'm
charts.
excited,
Let's get
man.
good
It's gonna be
stuff.
a
Let's
great
get
week.
fun stuff.
It's gonna be a great
Yeah.
week.
I'm going to share my screen, and let's rock and roll. So for
First
those
off,
of you,
nothing that we mentioned tonight on terms of any of the stocks that we mentioned tonight is any financial advice. What we're doing tonight and every single Sunday and every webinar is telling and showing you guys what our plan is going into the week, what our plan is going into tomorrow.
on our joint account. So Josh and I have our joint account. We started it back in July. We originally funded it with $30,000. And the idea with the joint account, we have our setups that we talk about. We make our game plan. We have our watch list. We make our game plan. We let you guys inside of our brain what we see, how we plan on managing our capital, how we plan on managing our risk. And that's how we trade with the joint account. We always start off breaking down broad market. The best indicator, the best medium that we use for that is SPY, SPY. So, I mean, it's one of those weeks where there's not a ton to discuss. I mean, we've had, honestly, the last 3 days have been gorgeous in my opinion. 1, 2, 3 red days. We tagged as low as 2.2% drawdown on 3 red days in a row. And you see we've gotten close, and we really did back test that breakout spot that we were at several weeks back. So, I mean, really, as long as we hold this high, which is 356 or so, I mean, we're looking super constructive. It's a very constructive setup. There's still reason to believe that we could do one of those blow off type situations where, you know, we rattle off 3, 4, 5 green days in a row and get us up to like 375, 380, something like that. I mean, it's still in the cards. It's still very much possible. The ideal scenario would be 1 or 2 more days, kind of flat, relatively low volatility. Yeah, like a low range candle, 1 or 2 low range candles, and then we get a better feel because you know, right now we're more or less finding our footing right at this breakout spot, right at this support line. We're kind of finding our footing. So we can just kind of settle out, see how the action takes us. But overall, the take-home message, super constructive. We're super constructive. I don't know
Trend
if
is
there's
your
much
friend.
to comment about. Yeah, trend is your friend. Bitcoin, we've been breaking Bitcoin down for months now, since back in like July, August. And I mean, guys, it's just a gorgeous setup. There's not much to talk about here. 20,000, if we go for the 20,000 re-break, I think this still has a good chance of doing 25 to 30,000 by early spring, summer next year. To think that we can't do 50% off this all-time high break. If we go back 5 years and we pull back the chart, I mean, it's just your classic cup and handle now flexing. We have that digestion up near all-time highs, something that we didn't have last time. I mean, last time we had the huge run up, and then we've had a multi-year consolidation. We've digested this move for 2 years now, and now we have this digestion up here at the breakout spot. So I'm going to go back to the year time frame. Josh, talk about it for a second. I need to fix my blinds.
Yeah, so I mean, just think of it as like recently, like the way that the SPACs set up, guys. Like when we have the SPACs, they do their initial run up and then they consolidate and then they go right back to the all-time high and we start to see a next leg up. You know, you can use like Nikola, you can use QS and other examples, but this is just a much more spread out time frame of basically that same type of pattern. It's a very strong pattern, and the 20,000 break is very psychological. So when that breaks, you know, there's going to be a lot of air and it's going to start to open up. And we already saw what happened when it broke through, like when it held over 10,000, we made 11,000 to 20,000. We basically doubled in 3 months. So, you know, when you get higher prices, you get bigger dollar moves. Like you start to see things move $5 to $10 like in stocks, and then you'll start to see Bitcoin move in $500 to $1,000 increments because now we've got bigger prices. So that's kind of what I'm thinking when it comes to Bitcoin and 20,000 break.
Yeah, I just wanted to highlight the weekly and kind of draw some of the inflection points and outline, but here we are. Here's where we are. We're in this channel. That's that $14,000 to $20,000 channel. And if you pull up weekly time frame, as I was just showing you guys, go back, and now look at this. Just a perfect follow along this lower trend line. I mean, really, you could even draw it down here. Just perfectly riding along this trend, just perfectly following this bottom trend support line. And now you see the upper support line. So again, this could take several more weeks to kind of carve out and digest. Something like this is still totally possible, where we just kind of continue condensing and getting tighter and narrowing the range a bit more. It's still possible that it takes us a few more weeks, but the emphasis is on this digestion where it's taking place, you know, between 16,000 and 20,000. and then you pull back the weekly time frame and you realize, oh shit, it's digesting only a few percentage points from all-time highs. So, you know,
After 3 years, of just consolidating. So, this is a very, very favorable pattern for bulls.
yeah,
Very favorable pattern
one
for
of those
bulls.
setups that we talk about all the time where we're going to go back, we're going to use QS. We've used QS a lot recently as an example, but chart data kind of reflects, you can
Possible.
you can see patterns, and you can go back in time and review what current patterns look like based on different patterns and kind of draw, kind of infer what is possible in the future. But anyway, what Josh was talking about that SPAC pattern is what I guess we'll call it. But it's that run up, the pullback. Keep in mind, Bitcoin, this has taken place over the course of 5 years, whereas this chart, you're only seeing it happen over the course of a couple months. But it's the same principle in nature. So you have the run up. Why is this line coming up all the way over there? That's driving me crazy. You have the run up, and then you have the multiple year consolidation, and now you have some digestion up at the breakout spot. So if you go back over here, you have the run up, you have the multi-month digestion, and then you have some consolidation up at the all-time high. So it's that kind of look. Obviously they're different. Obviously the time frames are different, but you have a run up, you have consolidation, you see a breakdown, you see it come back, start to construct itself, another punk, and then it comes right back, reconstructs itself, and then goes to retest all-time highs. This is the classic pattern that you want to look for. This is like the most favorable bull pattern that you could look for. QS, same kind of deal. Run up, oh, it looks kind of constructive. Oh no, breaks down, looks ugly. Okay, kind of comes back. Nope, breaks down, punks you again, comes back. Oh shit, really comes back. Okay, now it's digesting. Now it's really starting to come together. Looks good. Okay, now it's consolidating right below the all-time highs. What's our next move? Oh, okay, that's what we do, right? So that's what you look for in this kind of chart. There's so many examples of this. Trade with traders, the way we break down these charts, only in the last 5 months, we've only been in operation for 5 months, but there's a backlog of these charts that you could probably find at this point scores of examples of chart patterns that look like this, that we've played, that we've broken down, we've talked about, and they've ended up running 100, 200, 300, 400%. So chart data, remember chart data, use chart data, current patterns against previous patterns, compare them, and use them to your advantage. I don't know if there's much else to comment.
I've talked with people before. I've noticed sometimes a lot of people, newer traders, they just look at like the last couple weeks of data, but it's really important to go back sometimes 5-10 years so you can get a better picture of like long-term data, especially if a chart has that much data. So just a reminder, because I've got a couple times messages about people be like, oh, I didn't even look at it for like 2 years back.
Yeah. And another thing, it's like, you see a lot of times traders will use a million different indicators. They'll use look at all these freaking indicators down here. Look at all this bullshit. It's literally just garbage, in my opinion. Some people could disagree, that's fine. Block out the noise, guys. I trade with volume and candlesticks. I use simple moving averages to help me line up parameters with scans as well. But candlesticks and volume, keep it simple. Don't overcomplicate it. Don't try to look super fancy like, oh, if I have a million things up down here, oh my gosh, I'm gonna look like a professional trader, and you know, this is going to get me 30,000 followers on Twitter, and you know, maybe I'll start making money. No, you just look like a jackass when you have all these stupid indicators and all these bogus overlays. And keep it simple, guys. Candlestick data, volume. If volume helps you, I mean, I don't see why volume wouldn't, but you could trade off of candlestick data alone. Keep it simple. Don't overcomplicate it. You don't need a million things to overlay your chart. Let's go to the next one. Tesla. Obviously, there's a lot of hype. There's a lot of talk. There's a lot of, I mean, there's always Tesla. Tesla doesn't go away. It never goes away. I'm going to keep it real simple with Tesla. You have Friday's high, which was 624. Thursday's high, which was
627.
So you have Friday's low, which was 596. You have Thursday's low, which was 566. Okay, so what do I want to see over the next day or two? Ideally, we can hold the low from Friday. So we don't want to go below. I mean, best case scenario is we hold 600-ish, 600 or so. If we can hold that. The spot to watch for me is that 630 spot. Friday or Thursday's high, if we can get through Thursday's high, there's a real chance that this could squeeze back up toward the upper 600s. And I know it always sounds crazy when we talk about Tesla and these price point and price targets and stuff like that, but you just have to keep in mind the type of stock it is. It's a super cult stock, a lot of shorts piled in this thing. That's kind of the key inflection point to look for. You can essentially block out at this point. You can go ahead and just block out all of this chart data for the time being. Block it all out. You don't need to pay attention to it this week. What you need to pay attention to is the last couple days worth of data. Right here. That's all you need to pay attention to. Keep it simple. Don't overcomplicate it. Observe the last week's worth of chart data, and going in even closer, like I just highlighted. Again, it's not complicated. We're going to go even closer in on this high right here. Okay? Thursday's high. If we break Thursday's high, this could speed back up to 670, 680, 690, maybe over 700. That's the spot to watch. That's what I'll be watching. Let's say we gap up tomorrow pre-market. It's at 630, 640 pre-market tomorrow. Game plan obviously changes a little bit because the most ideal scenario would be a slight gap down, catch its footing, and then kind of go for a high day break, and you can kind of join in on the trend. If we do gap up tomorrow, obviously I'll be watching for dip strength, see if dips hold, see how well they hold, see how well the intraday chart constructs itself. But on gap ups, it obviously turns me off a little bit more. That being said, as long as it can hold 620, 615, something like that on the gap up, I'm still going to be paying attention to it. But going forward, Monday, Tuesday, even Wednesday, as long as Friday's lows hold, and especially Thursday, because Thursday was a fat candle. That was a big candle. I want to say, I mean, we could find out the range. Let's go in. You had a 60-point range on Friday's candle, a 10% range. I mean, the last time we had a 10% range was this breakout candle back on the 18th of November. So we haven't had that kind of range since then. So big range candles, you want to see the dust settle. You want to see some narrowing of chart data, and that's what I'm observing. So that's game plan. 630 break, watch for dip strength, join trend, trust chart.
Yep.
The other big board stock that I'm paying close attention to is PLTR. It was an IPO back in October. It's had a monster run up. It had a 250% run up from lows. And I mean, really, again, and I say this a lot, but like, it's really, to me, it's just not complicated. Like it's closed. The chart is narrowing in on itself. It's getting tight. It's kind of it's one of those like high and tight patterns we see. We've got our low, we've got our high, we've got our low, and now we're kind of closing in on it. I think the better perspective is the hourly time frame. I'll pull up the 1 hour time frame. I'll go back 1 month, and you can see just how gorgeous this looks. It's just a really good hourly time frame. Go back. I'll do 2 months actually. But you see the trend line being a little more defined on the hourly, right? Something like this, something where you see that, guys. You see low. What the? Why does it keep doing that? The low right here, the low, and then the low, right? I'm not like, it's not complicated. It's not.
To be honest, it almost looks identical to BTC, Bitcoin's weekly chart, its hourly chart. That's how crazy chart data is, and that's how it replicates itself in nature.
Yeah. So with this being said, you're probably asking yourself, okay, so if I'm playing this, what's my risk? What's my stop going to be? I mean, really the risk at this point is at the lower end of this trend line. So that would be about 26 and a half, $26. So between 26 and 26 and a half dollars. You want to see that low hold. What's the inflection spot? Where you talk, Matt, you talk about inflection points and you talk about the significance of inflection points. Of course, yeah, because inflection points are extremely important. The big inflection break is right here around $30, $31. Over $30, $31, I could see this speeding up to like $35, $38 within like a day or 2 days. You go back to the daily chart. The daily chart shows you that there's been a lot of range already within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 2 weeks, 1, 2, 3, 4, 5, 6, 7. Within 3 weeks, we had a run from $11 to $34, a 200% run in less than 3 weeks. So to think that this couldn't do 50% within a week, 50% from 27 would be just a hair above $40. It would be $40, $42, $43, something like that. To think we couldn't do 50% if we broke this inflection point around $30, $31, I don't know. With the current market conditions, to think we couldn't do 30 to 50% on that break, I think that would be a relative conservative target to have in mind. Excuse me. The strike that we'd be playing would probably be something as close to intrinsic value, but still relatively cheap. So maybe like, so we're at $27, maybe something like $25, which I'm sure would still have a little bit of a premium, but it would definitely be a lot closer to intrinsic. So equities at 27, we're trading the $25 calls. I think those contracts closed just under $3 on Friday. So again, you're paying like an 80-cent premium. Not the end of the world, because guess what? If we got to $35, $40, those $25 contracts are going to be at $10 to $15. So you're talking about like a 300 to 500% increase. Another option, another route to play this, I've discussed this before. There's different ways to play options positions. You know, you have your intrinsic value contracts, which are just a cheaper way of playing than the equity. They're much more conservative. The math makes a lot more sense. There's less risk because you don't need to worry about implied volatility. You don't need to worry about the IV affecting your premium. But again, there's certain times where you have a chart that you can start trusting the range on the chart. So like I just talked to you guys about, the $30, $31 break, I would think that this could speed up to $35. So if the $30 calls are trading at like $1 and you're still out of the money, but you're trusting that range, then those $1 calls could end up being $5 to $10 in the money. So instead of these $25 calls where, you know, we're looking at maybe a 300, maybe a 500% run up, those $30 calls could be a 500 to maybe even 1,000% run up. But again, considering they're still out of the money, kind of far out of the money, there's obviously a lot more risk because you have to worry about all of your Greeks playing into effect. I just wanted to mention that because it's worth mentioning, because there is a chance that I end up playing something like the $30 calls because, again, I trust the range. But super important to understand what I see, what strikes I'm playing, why I'm playing that, and I think most importantly, where my stop is. And, you know, obviously I'm always respecting my stop, but that's PLTR. That's kind of my main focus for tomorrow too. Yeah, not much more to comment on that.
So now we're gonna go into like what our favorite SPAC plays are going for this week at least. So this has been a high radar of ours since last Sunday, or even the Sunday before we mentioned it. And we never took it, but last Sunday we talked about how there was gonna be a pullback, and that's where we were gonna be looking to potentially trade this as a second hand trade because we missed the first run up, and we talk about that all the time. You don't need to always hit the first run up. A strong chart will reconstruct itself, and they'll give you another opportunity to have to make a buy on it. So right now, literally all last week, we were being patient with it, and now we're getting close to that gap fill at $25. So really, what I'm watching for and what we're watching for in the joint account is to see what is watching for this gap fill of $24, $25. And honestly, I think at that point, it's worth having skin in the game. That's how we're going to approach it. If we start filling that gap and we get to like $23 to $25, it's going to be worth having skin in the game for us. And we're going to probably be using like, we're going to give ourselves wiggle room on the trade. So probably like 21.20, but we're not going to be too heavy until we start seeing some signs of the bottom. But I think there's going to be there's great risk to reward around that gap fill, and I think that it's going to start finding its footing once we get closer to that gap fill. So really, that's going to be a major trade. That's one of my big ideas going into tomorrow. That's something that I'm going to be very focused on, is looking to see what happens once we get close to that 25 to 24 level. I mean, they don't necessarily have to fill the gap, because I think there's going to be a lot of buyers like we saw on the last gap fill from 20 when it gapped up to 22.50. There's a lot of people who are anticipating a gap fill, and it never fully closed the gap. So I'm gonna be watching very closely around the $25, $26 level tomorrow, and I'm gonna start entering a position. And you know, I'm not gonna get too heavy too quickly, but you're gonna be watching. I'm gonna be watching for an intraday consolidation to start to form, and start to form some like dips, start to see some higher lows off of the first big dip towards that gap fill level. And that's the strategy that I'm going to be using tomorrow to play. Either tomorrow or hopefully tomorrow or Tuesday, we go and we fill that gap, and I'm going to be building a position on that stock. And I think that once we do bottom out, I can see it going back from $25 to $30 pretty quickly. And it could definitely go much higher, probably will go much higher, but I just know that that's kind of the trade I'm gonna be looking for, like a $5 to $6 trade off of lows and within a day or two.
Yeah, cool. PIC, probably our second favorite, one of those SPAC type charts that we're still paying close tabs on. I mean, the obvious break is the recent highs, which is $18.50. But the ideal scenario A type of situation is if we get like a couple more days like this. If we could just kind of consolidate in a descending but yet constructive manner for the next 3 to 5 days. That's kind of the spot that we scale in and then use like 17 to 17 and a half as that like inflection point. You know, does that make sense? Like what I'm mapping out? Because this is scenario A. This is best case
The
scenario.
way that we're going to be playing this is what we're going to be doing is like what Matt said, we're going to be looking for contracts that have barely any premium. So something that's close to intrinsic value. And we'll probably be scaling in on some of these dips using that 1550 level as our stop out. So the risk is pretty clear. We have a higher low starting to form off of Friday's candle, and watching really that 1550 to like 1520 level as our new base. So I think that if we get down to 1550, like 60 again, I think that there's going to be buyers that continue to step in anticipation of the vote that takes place on December 27th to see if they're going to merge, if the new company is going to merge in, XL Fleet is going to merge into this trading vehicle.
Yeah, like right here, here's an example of one of those type of flags. That's essentially just what I'm looking for again, just that flag. A flag right above the key inflection points that we've previously recently broken, and then just kind of come together, construct itself. And then, you know, if we go back, if we do scenario A and we consolidate a couple more days and we break that inflection spot and we go for that $19 break, no reason this can't run to $25, $30. That's the game plan. Not complicated.
We'll even have a name for it. We'll just call this like a positioning swing trade idea. That's kind of how we're approaching it, with a week to 2 week time frame on the trade, and to see how this starts to shape up.
Yeah. Scenario A. Scenario B, which is, you know, one of the less confident scenarios, would be if we just get a fat green candle tomorrow and, you know, we close around $18 or $19. Yeah, we would want to have skin in the game, but scenario B would not allow us to get the same size as we would have in scenario A. Because scenario A, we have more chart data, we have more digestion, it gives us a little more confidence and time to scale in. Whereas scenario A, it's like, oh shit, we're kind of chasing, like your scenario B, sorry, is like, yeah, we're technically kind of chasing it, but like we trust the chart, we trust the sector, we trust the ingredients behind it, but you know, we can't go in a huge position because it just doesn't make sense from a risk to reward perspective.
And scenario C would be a break of like the 1450 level, like even $15 would be a break of like $15.
I don't want to see this lose $15. At that point, it would be kind of unconstructive to me.
At least temporarily, yeah.
But again, honestly, that scenario C would even be better than scenario B, because scenario B just doesn't give you a lot of time to work with it. You kind of need to make a rush decision, and yeah, it just won't play out as effectively as scenario A. BLNK, CLSK, I just want to mention them because they're still constructive. I just don't want these to fall off radar because, oh, whoops, why was it? Man, oh, you know, that's why. It's because I'm so zoomed in. That's why it's doing weird things. Anyway, you can see this little micro channel after the recent run up. And the inflection point to watch break here is last week's high, which is right around 30, that $30 mark, over $30. Again, it's not something that I'm gonna have super confidence in. This would be like a B+ setup. So a B+ setup, I'm still gonna play it. I'm still gonna have a little bit of size, but I'm certainly not gonna have like A or A+ size. I'm not going to have A+ size confidence, and I'm not going to have an A+ size position, but it would definitely be like a B to B+ type of setup. And you know, we saw how powerful of a move it made several weeks ago. So to think that it couldn't kind of break this inflection point and make a run toward 40, yeah, I mean, to think that it can't do 30% more, you know, it's like, okay, yeah, that's not, that, when you really think of it, that's not asking too much, especially off of this setup, knowing all the ingredients that are in place. Stop, or I guess, you know, since I don't have a position right now, I guess where it would be unconstructive would be below 25. So as long as it holds 25 over the next couple days, even like 26, ideally it holds like 26, and it's still kind of in that pennant up here right below that inflection spot. CLSK, really, I nailed this one over the last couple of weeks. My first mention was back here a couple of weeks ago around $11. And I mean, wow, I didn't realize percentage point like that really hit like 60, almost 70% from the time I first mentioned it. And it really never truly became unconstructive or gave us a reason to stop out, even though we did on this candle here. But yeah, the last 5 days, super strong action. 1, 2, 3, 4, 5, 6 green days in a row. So
And we pretty much talked about like how when it gives it the signal of like when we start to see some strength, it's like going to be a lot easier for us to like join the trend. And there was no rush on the trade. And I know you probably traded it differently in the personal account. I didn't really make many trades on this on my personal account, but I watched how you traded it. And I think it's important for me just to note it for trade with traders. So, you know, when the trends start to form, what Matt was doing was like, okay, we got the big break. Now I'm just going to watch for dip strength. So, you know, what we talked about on last Sunday, is kind of how exactly that we traded it. We were very patient on it. We didn't have much size at all. But once we start to see some of that volume and key inflection points come out, I started to see Matt position into dips, knowing that we trust the setup. So that's just really important to emphasize why you need to have scenario A, B, C, D in your head. So when you see those scenarios start to play out in real time, you're able to act on those scenarios.
yeah. So I think scenario A here, I think the best scenario for the next like 1 to 3 days would be a red day, maybe 2 red days, get a nice wash, because we just put in 52-week highs. We broke the key breakout spot, which was, I guess I don't even know what price point that was. Yeah, it was right around $15, was that big spot. We jolted through it. We had a pretty ugly close. That's not a particularly pretty candlestick that we put in on Friday. Big long range with a big upper wick, and we closed essentially where we opened, which was at the bottom range of that candle, of that wick. So really kind of an ugly close relative to the action. So ideally we have a red day, we get a wash, we could dip back down as low as like $14, and this would still be constructive. Because 14.
Kind of looking at that other micro channel on that last previous high, yeah.
Yep. So $14, you know, we're still super constructive. If we got a red candle down there, I would probably take a feeler size, kind of scale back in. I don't want to see it go much lower than 14, 13 and a half. At that point, it would kind of turn unconstructive for me. But yeah, a wash, a quick washout, maybe even at open or something, a quick $1.50 washout, get a couple contracts, get some skin in the game, and then over the next day or two, watch it kind of tighten up and take it from there. But yeah, it's a super constructive setup still, and I'm still watching it close. This OTC setup, I just want to throw out, I want to mention, you can see Friday's volume, definitely an anomaly. We haven't had that big of a volume day since this run up back in August, where I think we actually did cover this back then.
We did.
Yeah, we did. But yeah, I mean, back then, you know, we had a 120, 130 point move, or 130% move within like a week. I'll show the daily first. I'll pull back the daily 3 years. I'll show you kind of the spots we're working with here, because we're getting to some important spots. So that 20 cent break was a pretty significant break, because the high of the year back in August was just a hair below 20 cents, and we broke that Friday. The next big spot really is like mid 20 cent, 25, 26 cents, something like that. So you really have to go back to like the beginning part of 2019 to see like where the next target would be, kind of. I'll just say that's first things first. That would be like the first target. I don't want to get overly optimistic or too aggressive with targets, so I'll kind of just keep it at that for the time being. Mid 20 cent range off of this move. If we get a red day or two, as long as we hold above like 18 cents, it's still constructive. The volume's definitely better than decent as far as OTC is concerned. So yeah, it's a constructive setup.
I found the chart that's exactly the same to that chart, like exactly, like literally like the exact chart, dude. And you're not gonna, it's gonna be no brainer once you see it. But if you pull up OWCP from May 2016 to January 2017, it is literally the exact pattern, bro. May 2016 to January or to January 2017. A little bit more forward, a little bit, oh wait, no, back, sorry, to 2017. It's the exact same pattern, further back, like further back. No, yeah, right there, yep, back, like 10 more days. 10 more, like, oh, yeah, right there, now zoom in. Now pull up SHMP. Just in terms of like chart data, guys, and it's like the backlog. This is just a backlog thing that like it just goes off of what Matt's saying. Like when you have experience and you build up your backlog of trades and patterns, it's like, to me, I looked at that and I was like, you know what pattern does that remind me of? That reminds me of the old OWCP pattern.
Yeah, and I'll highlight what Josh sees. I mean, the first highlight is just riding along the 50-day, here. You see riding along the 50, breaks it. I think this is worth noting. Right when it breaks the 50-day, it has that brief consolidation, and then it has that clear candle afterwards with the volume. So you see definitely an anomaly volume there.
Sorry, I missed that.
Shut up. Yeah. So I'm starting to definitely see what you see as comparative wise. Yeah. It's definitely similar. Good
Right.
compare. Yeah.
But yeah, so, and if you pull up the long time frames, like what Matt was talking before I said anything, was that 20 cent on SHMP is really big. But you know, it really just depends if the volume comes in at this point, because OTC is really about volume and clearing out a lot of the retail. Because if you look at OWCP, the reason it had a big run afterwards was there was tons of volume that poured in.
Yeah, like exactly. Shrimp needs like, it's going to need a big volume day like this. It's going to need a 50, 60, 80 million dollar, or I'm sorry, 80 million share volume day, which would be like a 300 to 500% increase of volume than what we currently have, which sounds crazy, but like the way OTC works, it wouldn't shock me if it did happen. And OTC right now is trading the best that it's traded since probably 2017. I haven't seen OTC trade this well in the last like month. I haven't seen OTC trade as well as it has the last month in the past like 3 years. So it's worth noting that OTC is hot right now for sure.
Now going into our next segment.
I just want to say something real quick though. We have been talking about these mushroom stocks for weeks on end. So I don't want to spend too much energy going back over them because we've just talked about them so much. So just keep it simple, keep it quick, Josh.
So what we're going to talk about though is where we think what we're going to focus. You guys have all of your magic mushroom stocks. We've talked about a lot of different magic mushroom stocks, but I think what we're going to just cover quickly is kind of what we anticipate to be our main focus for this week if we start getting some momentum. So of course, I mentioned in Discord earlier this morning, but CMPS, we've talked about this for weeks and weeks and weeks, what we think is going to happen, what we anticipate can happen, I should say. But really, with MMEDF making about a 300% move in the last like month, I think personally, if we see a $60 break, I'm pretty sure I'm going to be confident to start sizing in to Compass for a move to $80 to $100. That's what I'm anticipating. That's how I'm playing Compass. We have a great pattern start to forming in the hottest new sector in the market, and a $60 break.
It's still relatively unknown.
Yeah.
Wall Street hedge funds, like they aren't positioned in these stocks yet. I promise you, they're not. They're not. They're simply not. So we're still very early, even still.
And so we haven't seen like that trigger, like we haven't seen that follow through that we've been kind of like talking about for a while now. So, I could be wrong. It could still just be a slow grind up, but at some point we're going to speed up in a big way on CMPS, in my opinion. And I think that the way that the action happened on Friday, to me, like there's a lot of shorts. There's like 2 million shorts already in this. It already has a very small float. So really, this is my focus for this week, and one of my top focuses for this week, and it should be clear why if you go back and watch all of our Sunday webinars for like the last like 5 weeks.
Yeah, and I will note, just like one of those type of homework study lesson pieces. If you go back to the last 3 red days, so 1, 2, 3, actually the last 4 red days, we have engulfed every red day the following day, the last 4 red days. That's extremely bullish action. So Thursday's red day engulfed it. This red day gapped above it. This red day completely engulfed it, closed over it. This red day almost engulfed it, but the following day completely engulfed and went over top of it. All of that action followed these 5 green candles. So we had a 50% run up in a week, and then a red day engulfed, red day engulfed, red day engulfed, red day engulfed. Like Josh is saying, at some point they need to just kind of rip. They just need to rip it, right?
Yep.
Like that's how the market works sometimes. The market operates. The market's weird. The way the market works is just weird, but we've experienced enough of these charts and we have enough experience under our belt to know and understand, especially with a unique sector as this and an exciting and virgin sector as we have here. Sometimes early on, you just need to rip it 100% in the course of like a week and blow up some shorts and really, get some sparks flaring.
Make it a cult name stock, make it a well-known stock, and that's what's going to happen here. It's going to become a well-named stock. Nobody's here yet. Like still nobody's here. It's very little volume. It's trading like 400,000 shares. When this thing, like I'm going to make in my opinion, this is going to trade 20, 30 million share days. At some point in the next couple of weeks, we're going to see 20, 30 million shares pour into CMPS, and we're going to see every dip get absorbed, and people are going to rush in to take a position in the stock. And that's what I believe is going to happen.
It's going to be right here around $53. That's kind of the spot where if it breaks below, it's no longer as constructive. So 53 is that spot to hold. Above 60, this could speed up to $80 to $100 within a relatively short amount of time. GTSIF we talked about briefly last week. We're gonna focus. So there's a lot of mushroom stocks. You can play however you want to play. That's totally up to you guys. Joint account wise, we're narrowing our focus to like 3 or 4 names because right now there are a lot of names and we don't have unlimited capital and we don't have unlimited energy to deal with it. So we're kind of focusing on the best risk reward type of setups in our opinion. GTSIF had a nice solid green candle, 60%, had a red day, still it didn't even go halfway red from Thursday's candle, which to me is strong. So as long as it stays tight up here, that 15-cent break, and we got to go back, we got to pull up the chart, go back a year and a half. You see it's a super strong chart. We broke that key inflection spot right around 11.
Yesterday, basically on Friday.
Whatever that is, and now we're kind of holding there. Going forward, we want to see, some digestion right where we broke it, something along the lines of this.
This is what I'm going to say is a very likely scenario to happen. We see an engulfing pattern just like we saw in CMPS. Like that wouldn't surprise me at all. Like I've been saying for the last 4 weeks, the dips are going to continue to get bought up on these names until we have a blow off. Until then, every dip's going to continue getting absorbed, and people are going to use the dips as buying opportunities. So this one has a great risk to reward, and it wouldn't surprise me one bit to have it engulfing our early on and go back to 1450 by Tuesday, Wednesday of this week. So this is why this is a focus, because the inside day, you can go back and look at all the mushroom charts and see what happens when they have 1 or 2 red days. They've been getting bought up to this point. So this is basically, it broke a big point. We have our first red day, and now we're going to just be looking to add on this dip for the coming sessions.
Psych, PSYC, OTC stock obviously doesn't trade the same dollar volume as other big board stocks that we talk about, like your Teslas and your QSs and stuff like that. But if there's anybody that knows OTC, it's Josh and I. Our bread and butter, how we got started, the way OTC works and operates. We spent 3-4 years pretty much only trading OTC. It wasn't until like 2016, 2017, where Josh and I started venturing out to like small caps, mid caps, and eventually large caps. But we started with micro caps. We know how micro caps operate. And let me tell you, this is one good looking chart for an OTC stock. You have, obviously, the first thing to look for is volume. You can't make a parabolic type of run up without some kind of volume. Volume is anomalous. We've had some anomalous volume bars supporting these green candles. The red volume bars, all lower volume than the green candles. That's first thing to look for. The second thing that we look for is a carved out, defined bottom. We had that right in here. We spent several weeks. I'll just carve this out here. I'll do a smaller color or smaller border. You see that rounded out, a couple anomaly volumes, but then you had the big volume supporting, and where we're trading now relative to where we traded over the last year. So I'll do one more channel for you guys and kind of give you a little more of an illustration. So we go back a year. I'll take it further in a second, but you see, it's driving me crazy. There we go. This box here. So you see how we just kind of, it was just boring. There was nothing to the chart, low range, not much going on. And it was just kind of selling off, sold off, had this carved out bottom with some anomaly volume bars, and then bam, big volume bars over 50-day moving average, over the 200-day moving average. And now it's constructing itself. What do we do now? We pull back even further. So let's pull it back 2 years now. Now's where we kind of start looking at price points. And keep in mind, price points, if you're using previous data, you look at previous volume too. So like, okay, I'll show you the volume from back here. You see it was like nothing. Compared to now, it was nothing. So I'm gonna compare these highs right here. I was gonna talk about this. So 5 cent resistance, and then after that, There's really not much up until 12 to 13 cents up here. You see that? But again, we weren't working with the same kind of volume, because the volume up until recently was it was non-existent. Like you can't even see the volume bars show up on the chart, right? But now we have the strong volume, we have the super constructive chart data, which is for the first time I'm gonna clean this up a little bit, but for the first time in 3 years, sorry, let's go back even further. Let's do 5. For the first time in 5 years, we're trading above the 200-day moving average, and not just trading above the 50-day moving average, but like really sort of consolidating and constructive above the 50-day. The last time we did that was way back here. Back in 2017, so 3 years ago. And I mean, the company was probably an entirely different company back then. I don't know anything about it, but that's a big thing I look for. How long has it been since we've been trading like this over the 200-day moving average? It's been a while. It's been a long time. I'll crunch the chart back in a little more just to give you a better look. But look at this, guys. 50-day break, 200-day break, anomalous volume, trading above it. Thesis hasn't changed. We're still respecting our stop. If we trigger stop, we're gonna trim. We're gonna be patient, but we're really just trusting the setup, and we're gonna let the trade work for itself. 5-cent break. I think this does 10 to 15 cents.
So not to make any like more like I just want to make one note. Stocks like OWCP, which was in the right sector at the right time with a pretty similar share structure. Like, let me just check on the share structure one more time with PSYC and also SHMP. All of those stocks came from the 0.005 range. They came from 0.004 and they were at the right place at the right time. And just for like reference of like what's possible in OTC and why we were able to basically start our career, what Matt and I did prior to what you see now was try to find penny stocks that were going to be the biggest penny stocks in the market. That's really how we got on the map. That's how people start to find us on Twitter. We were in stocks like OWCP, sub penny, and then that goes to $3. We're in stocks like SHMP. Like there's lots of.
Josh and I were making like maybe $100 or $200 on these trades that we were in at bottom, and we would watch run 1,000%, and Josh and I would make like maybe $1,000.
Yeah, 1,000, 3,000. Good day was like 3,000.
We knew exactly what they were gonna do. We knew exactly how they worked, but it was so early on in our careers, like we just minimized every time for years and years. But yeah.
We leveled up now. We leveled up.
Of course. Yeah, no, I'm just saying back early on, still knew what was going on, but like
it's a good transitional thing though, like in a good way. Like we were like, now we're in the point in our career where it's like I can look at something like this and now knowing like some of the mistakes we made with some of these other big penny stock runners where we had them a major opportunity, life-changing games, honestly, from stocks like SHMP that went from 1 penny to $1, stocks like RXMD that went from 0.002 to 30 cents, 50 cents, stocks like OWCP that went from a penny to $1. I'm not saying that this is going to do that, but just understand that what sector momentum is real in penny stocks. And when you get volume like this with a good share structure, things can get really wild. So really, like, that's why we're going to continue mentioning PSYC. As long as we remain constructive, guys, the sector is right. It has a good share structure. And, you know, we've just seen how this plays out, but obviously there's higher risk involved. So if you do enter this, make sure you do have a stop in mind. Just like any other trade, it's not just like a buy and let me just hope. No, we have a strategy in mind, we have a game plan in mind, but we also understand what the potential is. And so I just wanted to like emphasize that point that, you know, this is a kind of how our career started. This is kind of how we got on the map. And we don't really talk about many penny stocks anymore, and we really focus on only ones that we do think have big time potential.
Exactly. And also, I will say, like, this is one of those charts with sector and niche and all that stuff where, like, if this did end up running to 50 to 75 cents or something like that by like spring next year, you know, over the
Or
next,
before that.
yeah, like that wouldn't shock me. I hope we bank, because, you know, we can talk about it and we can talk the talk, but like, will we walk the walk? I guess we'll find out. But yeah, this is one of those charts where, like, if it speeds up and the volume just keeps pouring in, yeah, we've seen it before. So be conservative, have your risk set. Keep in mind that the volume is not the same on OTCs
Yeah,
as it is on
that
big
5
boards.
cents break, dude, you're right. When I look at it now, again, after talking, that 5 cents break is actually like, that really will do it on the 5 cent. You're gonna see, I think you're right, we'll speed up in a really big way on that 5 cent break. And
Yeah,
but you know, don't expect this to happen overnight, guys. I think that we're like, the way I'm seeing this chart, I still think we could see a couple more days of consolidation under the previous highs. And the more digestion we get, the more consolidation we get closer to that previous high, it'll be easier for us to size up and play into the next breakout. And then finally, the last mushroom chart, we have two more, I guess, three more, but PEMTV.
this is the last one I want to talk about.
PEMTF, the chart's not good right now. There's no, it's not very constructive, but the idea here is we have clear risk. The risk level is 4 cents. It's in the right place. There's an obvious seller. I've seen this lots of times in penny stocks. There's a seller, they have some conversion to do, converting that they need to do, which is important to the overall trend, the future trend of the stock. We need shareholders, we need volume. So idea here, grab some shares around this 5 cent level using like 4 cents or 4.2 as our stop out. But once this seller clears with all the sector momentum, this is going to open back up. L2 will be able to open back up. There won't be any more pressure on the stock. So that's the general idea, is using the 5 cent level kind of as our place to play. It's a shroom stock. It's easy risk to reward. The very clear risk. We haven't started moving yet, and it's just about us being early.
Yeah, I don't know if there's too much to talk about, too much more to talk about. Sounds like we have a, you know, pretty solid game plan. I think.
Don't end the recording, by the way.
No, I'm gonna stop sharing screen. So we have, all right, I'm gonna double check. Record, stop sharing screen. Boom. All right, we're still good.
All right. I hadn't mentioned that, dude. I was like worried about that. But yeah, guys, I mean, really, I think let's level up this week. Like, let's get better. Like, let's take our time and each one of us put it on our own responsibility. Like, Matt's not going to make me better this week. I mean, he's going to be an influence to make me better. But at the end of the day, I have to make my decisions and I have to level up myself. And so take personal responsibility for your trades this week. Have your own game plans in mind and have a goal on what you want to accomplish this week and what you are trying to do. If it's just making a better trade, if it's cutting your losers, if it's letting winners run, right? Like, choose something you want to focus on and get a little bit better this week.
Yeah, stick with your game plan. It's like, if you trust your gut, and keep in mind, trusting your gut, it becomes easier the more experience you have. There's a lot of trial and error involved with trading, but trust your gut, respect your stop, know when to attack, know when to pump the brakes. These are like, you gotta know those and be humble in victory and defeat. I don't know if there's too much more to talk about. We're gonna have a kick-ass week. I trust my gut. You trust your gut. Josh and I together, like, even if, let's say this week's a red week, it's not gonna be, I don't think it'll be, but like, let's say it ends up being a red week. Josh and I are gonna learn a shit ton if it's a red week. We're gonna learn a ton. We're gonna learn every mistake we make in the market, it's backlogged. We recognize what we do wrong, and we correct those mistakes. But let's make it a green week. Let's have a kick-ass week. Let's trust our gut. Let's trust the setups. Let's trust the game plan. Yeah, let's see how futures open tonight. It'll be interesting because there's a lot of stuff going on.
Yeah, it's been fun. Well, I hope you guys enjoy and have a great rest of your day, and we'll see you tomorrow.
Hell yeah. Take care, guys. Peace and love.